Hello, thank you for interrupting your lunch to join us here. You are up for a treat. Hopefully everyone will leave more educated after this session. My name is Sol. Hopefully I have some friends in the audience. I work for CoinDesk, the media and events group. I am a director of partnerships, and my role is to look after our clients across Europe. And I am joined here by a stellar lineup. I will start the panel by introducing all of my speakers, but what you are, hopefully you're in the right one, we're going to hear about the next generation of investors and how brokers are adapting to it, to this new type of customer that demands a new type of asset class. So I will start with Moritz.
Yeah, thank you very much. I'm Moritz. I'm running at flatexDEGIRO, the market side, together with a colleague. We're an online broker, 15 countries, 3-point-something million retail clients all across Europe, and including a, from my point of view, very good and significant group both in Spain and in Portugal. I'm speaking today because we're last year built within 3 months a crypto offering, real coins, 20 coins. We've been completely overwhelming our IT organization with it, but anyhow. But it's possible, and it's to get to the investors. We think it is important, A, to attract new clients, but also to give a complete portfolio to our clients. The asset class is way too big to ignore it. It's here to stay, so we had to do it, and we think we were late.
It's not going anywhere.
No.
Excellent. Chris?
Yeah, hello everybody. My name is Chris. I'm the founder of Tradias. We are a German-based, BaFin-regulated securities trading bank focused on market making and liquidity provision for institutional clients in the digital asset space. We've been around for 5 years. Originally emerged out of a traditional securities trading bank, partner with a number of retail-facing brokerages, neobanks, and traditional banks. flatexDEGIRO is one of our esteemed partners, and yeah, looking forward to discussing some of the challenges and then also the solutions to enable, of course, traditional platforms to enable crypto trading for the retail client base.
Thank you. And we have Mark.
Mark, I am head of Europe for Gemini. Gemini Crypto Exchange, founded by Winklevoss twins back in 2015. Been around now for 10 years. We look to build ourselves to be a 100-year-old company, and we see Gemini as forming the kind of future of finance, and that's what we're building towards right now.
Excellent. Thank you for being here. And Alexander?
Hello, everyone. My name is Alexander. I work for Swissborg, which is a Swiss company. We're also an exchange, but we go a bit further than that in the sense that we do wealth management with crypto. So we help investors, being newbies or seasoned investors, to invest in the crypto world, in the world of Web3. So this is me, and my background is I come from the TradFi world. I worked 16 years in the traditional space with UBS, Pictet, other banks, and I made the huge leap of faith 4 years ago into crypto.
And how has that been?
Exciting.
Hopefully you will never look back, right? Next gen always, from, let's say, a wealth management, private banking type of perspective, always feels like it's a transition of wealth, or the trespass of wealth from one generation to the other. We are talking today about the next generation of investors, although I would probably call it the current generation of investors. This isn't the future, it's more like the present these days, isn't it? So, starting with you, Moritz, what would you say that defines the next generation of investors or the current users now, which is why you've created what you were telling us as before? What do you think they expect in terms of access, in terms of user experience, and the assets classes?
Yeah, I think it will be a bit different than in the past, but we still have some cornerstones as before. Stable platform, especially in difficult markets, not only when the sun is shining, the top thing. Good client support with a person on the phone, help with AI and whatever, but if you need to, you have a person to call. That gets more and more important rather than less important from our point of view. Trust, like ever in banking, trust is the basis for everything, and that is even more the case in Web3 and anything else. But at the same time, we have very interesting inputs or insights into our clients and what they really care about. Do they care about price? Do they care about speed? What is relevant? User experience is relevant. Getting into an app and trade within seconds is more relevant than the best price for one group. But if you cover different clients, well, if you have experienced clients who trade ETPs in the past, warrants, whatever, if you show them an unclear price and a non-predictable quote, you lose the client instantly. So for us, we've intentionally chosen to say we give you a predictable price, it's transparent, it is comparingly cheap, but it's not the cheapest, but it is predictable. And that really depends on where you see your client group. For the 20 to 30-year-olds, maybe it's different. For the 50-year-olds, they look at transparency.
Would you tend to agree or disagree, Alexander, with this view?
No, I definitely tend to agree. I would say that here we need to keep in mind that we're dealing with a cohort of people who have grown up with transparency, full transparency, with personalization, with instant access. So it's a very specific cohort, and they don't want the same as their parents were used to. For example, sitting in Geneva or somewhere with a banker, etc., with somebody with a suit and tie, that's gone. I think most of them are looking for a one-stop shop where they can find everything under one umbrella, straightforward. Most of the time they do their own trading, etc. Some of them are okay with having advice, but it's a very, very different approach than the way wealth management was done 15 years ago.
It's much more hands-on, isn't it? Mark, Chris, is there anything you'd like to add?
I think we've moved into a stage where people expect full coverage all the time, 24/7, and crypto markets provide that, but also the instantaneous feedback that we all want to receive when we sit in an app, want to be able to see real time what's happening, be able to move cross-chain, be able to move cross-wallets. That's an infrastructure that doesn't exist in traditional finance. It's old, it's dead, and it doesn't compare. So crypto builds a different generation of investors who expect immediacy, who expect transparency, but expect full control and ownership as well.
Ownership, that's also, you're in a way much more invested into your service provider. Chris, is there anything you'd like to add?
Yeah, maybe just one thing. I think we talk a lot about the technology, but when I look at the new generation of investors, I think they take almost the technology for granted, and really all they care about is a seamless user experience, right? So I think what we got to make sure is that the technology is working, that it's efficient, that it's cost efficient, but really I think for the user, it's probably not as important to see actually what's going on behind the scenes. For them, I think the seamless experience is what's key, and I think that's also a big change that we're seeing.
It is important because in many cases that's what, aside from the fear of the unknown, I feel that the user experience tends to be what puts people off as well from crypto. So let's move. So as you were saying before, private banking is much seen as a very traditional type of business that is shifting already, and it has been in changing for a while. What do you think is the bridge that we need in terms of the regulatory framework for traditional firms to be able to offer a digital asset service, or for the digital asset service providers like Gemini? What do you think they need in terms of a regulatory framework?
I think number one, MiCA was a great first step. It put a benchmark in place for us to understand what the expectation was for firms that got into the digital asset space. And I think for a long time, there were some bad actors that maybe played against us in that. And so first step, implementing MiCA was a great first move. We then get into focus on how do we integrate that with the third parties that we work with and institutions. So instead of the fragmented previous regime, you have a kind of an overarching compliance framework that satisfies some of the concerns that may have existed before because regulation didn't exist. So I think it was an important part for us to establish what good looks like, and that the benchmarks that we can hit give people confidence to invest in the space. That allowed us then to build and grow the product set that we could offer. So not only were we able to tackle the compliance functions that needed to gain trust within the market, but it allows you then to build on top of that platform where there is confidence. You can then start moving into tokenized equities, perpetual futures. All of those elements rely on a really solid foundation, and I think MiCA was an important step for that to happen.
Yes, you have the framework, and you can actually have a regional franchise as well. Chris, what would you say about regulation as well?
Yeah, I think similar to Mark, MiCA was a great step in Europe. We're seeing some more regulatory clarity coming out of the US as well this year. And I think that's exactly the point. Removing uncertainty is the most crucial fact, right? We can talk about whether the regulation is perfect or what aspects might be able to get changed. But I think removing uncertainty, particularly for traditional institutions to gain comfort, to move into the space, is extremely important. And what we've done actually since day one, so we're a MiFID regulated entity as well as MiCA, so we sort of live in both worlds. And we've taken a gold plating approach, meaning we've applied actually MiFID rules to crypto assets, even when they were not regulated as such, because our customers, they were familiar with those processes and procedures, and we try to map as many of these procedures and processes to what they're used to, making it feel just like another asset class. Because I think when we look at any project in the past, successful and unsuccessful, if you're not able to convince and bring in the control functions of those traditional banks and players early on and make them feel comfortable, the project is bound to fail, right? And I think having regulatory clarity and see that continuously evolving is a crucial step, and sort of mapping that to how the traditional world works, what is the same and what is different is really, really important for the success of any project.
So there seems to be a consensus that the framework is not perfect, but it's good that it is there. It has made your lives a little bit easier.
It's needed. It's 100% needed. What Mark said is 100% correct. It was very needed, and it's all about trust. And at the end of the day, the regulation helps to set a framework, and it helps building the trust in the space. Do
you think your older customers feel more comfortable because there is some sort of investor protection then?
Yes, 100%. This was very much missing up until now. At least that's my feeling.
It's always the same, whether it's banking regulation, whether it's MiFID, whether it's MiCA. It's painful, yeah? And yes, it's a boundary to get over, but it's the only basis to really build a proper solution. And it doesn't matter how bad the rule is, as long as it's consistent and you have level playing fields. Yeah? We can adapt, and that's one of our, well, not only in this particular product, but also if you're active in 15 countries, 15 different views on investor protection and consumer law, great idea. That's why no one else is doing this.
No, Mark and I were talking about this earlier. It just makes costs just impossible to manage. Excellent. Okay, so it's what I was going to say is that it also gives the asset class some certain of validity. It makes it, a much something that more traditional investors will be happier to. And we are talking about, family offices or like smaller personal investors. Let's go. We were saying earlier about the user experience, the technology, the agility that the customers demand. I wanted to ask you in particular, Alexander, how is your investment in technologies? Is that a top priority? There seems to be many things that you need to manage: regulation, compliance, marketing, getting out there so that your clients can find you. But how much investment goes into the tech stack?
Pretty much everything. From the get-go, we don't invest much in marketing. It goes all into this, because for us, from the very beginning, from day one, it was very clear that user experience is the name of the game if we want to be able to appeal to the masses. So definitely having an app that is super user-friendly, super easy to just onboard is key to success. And at Swissborg, we're extremely proud of one data point, is that we have realized over the last couple of months that we have, on a weekly basis, people who are over 75, over 80 years old, who are onboarding with the app, starting to trade. And for us, it's something that makes us incredibly proud, because it means that it's super, super easy to use. And that means that anybody can give it a try and start investing and work towards this financial freedom that crypto can bring.
Anyone else wants to add anything on the user experience and how we attract clients through seamless technology?
I think I can give two angles to this. As a starting point, well, we're a fully regulated bank. We were a neo-broker 20 years ago when the rule didn't, and the word didn't exist. Now we're somewhere in the middle, not the neo-broker, not a bank, but some strange animal. We have roughly 1,300 employees, and out of those, 700 are IT people. To answer your question of how important tech is, tech, then AML, then compliance, and then, well, the front office somewhere in the end. Yeah? So that's the general statement. On crypto, when we, as I said, we did it in a very condensed time frame. We've been taking every, well, loophole we could find on the core banking system and the booking and whatever to integrate it somehow. But the front end was fully integrated. It looks like every other asset. No in-frame something solution and just whatever. It needs to be fully integrated. Otherwise, you don't get the clients in.
Mm-hmm. Interesting. Anything else to add on this, or otherwise we'll move to the. I'm very pleased to be here with the disruptors, because again, wealth management is seen as something very, very traditional, and suddenly this bunch of people come along that they are getting more. I mean, not everyone is wearing a tie here, which is fine. We're at a crypto conference, but the type of your typical private banker has changed. The customer has changed as well, and these companies, your companies, are disrupting the business model. The lines between a broker, a wealth manager, a crypto exchange, they are blurring because those businesses become more and more similar to each other. So this competitive pressure, how do you see the landscape transforming? Do you think that traditional banks will have to adopt, being able to offer a digital assets service to their clients? Do you think that they will build that? Do you think that they will actually white label it from someone else? Who wants to take that first?
I think we've seen traditional banks now have clients coming to them looking for solutions. They want to give their clients access to Bitcoin, to Ethereum, Solana, but they realize they're behind in terms of building. The crypto companies, those who are more crypto native, have been operating in the space for 10 years. And so I think what we'll see over time is that we won't all provide one financial place where you can do your mortgaging, your banking, everything else. What we'll see is that in the investment space, digital asset and digital asset technology will start to dictate what that looks like. And I think we'll move from existing banking rails to on-chain movement of stable coins, and fiat becomes, I'm not going to say obsolete, but it becomes a less used transactional method for most people. And what we then see is the on-chain capabilities of transparency and ownership again puts it in the hands of the users. So I feel like crypto's empowered more people to be able to take ownership and direct what they want to do from an investment capability. And what we see then with tokenization, bringing equities on chain, bringing treasuries on chain, it gives you ownership and control of that. So I feel like the days of old of people providing advice and taking huge fees in order to do that, that's gone. It's now transparent, it's available 24/7, and it's focused on a product capability.
It has been disintermediated completely.
I think so.
And it's just the first and simplest use case for DLT. So distributed ledger has so many more opportunities than just crypto trading. It's the first one that is accepted and it's good, but it's a bit odd that this is the first thing that's really going through the roof. Yeah? When I started in looking to this, I was convinced that in 2 years' time we will not have anything like chartered accountants anymore because we don't need them. Yeah? It's all evidence, every single trade. Why do I need to talk about AS400s in the cellar and the booking center for my books and records? I know I was a bit too positive, but I still think we'll get there.
We are slowly but surely, yes, getting there. We were saying before, crypto is not going away. Chris, I wanted to ask you about, in terms of institutional versus retail adoption. And when we talk about institutional, I mean, family offices, fund managers. How do you see that trend?
Yeah, I think that evolution, particularly in Europe, has been a bit slower than the retail space. I think the market in Europe has been predominantly retail-driven so far, but we're seeing increasing interest basically on a daily basis from those kind of customers. I I think the hurdles to get in are at times a little bit different. Things obviously like counterparty risk are very important for those sort of players. They need deep liquidity, so liquidity for larger order sizes, right, which has been historically maybe a bit of a challenge, but obviously the market is evolving here as well. I think another big challenge is on the operations and reporting side, right? So if you're a fund manager, how do you label this asset? Am I actually allowed to invest into this asset? Germany actually quite early on had a regulation here that allowed to have basically a hedge fund type product that has 100% native crypto exposure, but it was not very widely accepted. So this was one of the few times where I think regulation actually moved first, but the market just wasn't there yet because people may have not been comfortable with it. I think predominantly because of the high volatility in the market. So I think the more and more robust the market gets and resilience is really key here, meaning being available at all times, being able to show liquidity at all times, even for larger order sizes is really, really important. Something we're working on. I think the market is going to become more price sensitive as well when more institutional players move in. So that's something I think everybody needs to be prepared for. But we're quite hopeful that we're going to see a lot more pure institutional players moving into the market, even in Europe, over the next 18 to 24 months.
Do you think that's the case, that we are building an ecosystem that will allow for that?
I think you will get CRR banks only really in if this uncertainty is solved about 3 times RWA holding cryptos on your balance sheet as a bank. That is, well, we agreed not to complain about regulation, be happy that we have one, but that's one really painful, silly component that we need clarity on. Because with that, you're just blocking so many business models, and it's just unbalanced from my point of view.
Yeah, no, I definitely, you know, the landscape is transforming towards that adoption. Again, we are sitting here with a group of disruptors. None of you seem very worried about banks offering crypto.
No, well, I can speak for Switzerland, but I see that the banks are doing too well in order to put the risk on this. I mean, today it's such a slippery road for them that I don't see them, and that's why we have such a boulevard in front of us. I'm not sure it's going to be the case in 3 or 5 years, but today they are still very reluctant, and at least the private banks, the universal ones, the big ones it's a bit different, but the private banks where have been evolving for the last 15 years, the clients are asking for it a bit, especially the next gen, and they send them to us. So it's for the moment, it's very good.
It's good for you.
Yeah, it's very good.
I suppose it's very good. We don't have much time, and I want to finish on time. So we talked about, you know, the next generation of investors, which is the present generation of investors, really. So if we were to think about the next generation of investors, what would be the most defining characteristic that you think a successful broker or investment platform should aim to have, say, 5 years from now? I don't know, in crypto, years are like dog years. So let's say 3 years from now?
We need better education. That's, for me, the key to everything. Logically, you need a stable platform and trust and whatever, as we started this discussion. But we need to provide good quality education to the broad masses. The population in Germany, extremely where I'm coming from, but also across Europe, there's so much financial literacy everywhere that even the basics are not there. And that, well, whether it's traditional finance or crypto, but this is really where we need to start.
Educating the future customer.
Yes, starting in schools, not selling products, but delivering facts. That's what we're trying to do. We even run a Spotify-listed podcast in the Netherlands and the top 10 on Spotify with a finance topic, which we're very proud of as an example. But that's nothing one person can do. The whole industry needs to do it.
No, the curiosity definitely is there. So I'm sure it's very successful. Chris, what would you say?
Yeah,
we have education.
Obviously, I can't say having Tradias as a liquidity provider on your platform, but no, jokes aside, I think having 24/7 multi-asset capability with deep liquidity empowered by blockchain is going to be key. You need to be efficient in the back office processes, downstream processes. I think having multiple asset classes will be a deciding factor, not only crypto, but mixing in traditional asset classes in an efficient manner, and having that all in a very liquid and 24/7 framework is going to be important to be a successful platform 5 years down the road.
That full-time coverage, round-the-clock coverage, and the speed as well. Mark?
I think Chris stole my line, but I'll take it as a good sign. Again, accessibility. I think that is the driver of the future of the investment capabilities. That 24/7, 365, deep liquidity and access. That's something that crypto can provide, and I think traditional assets will follow on the same route.
Yeah, just the being there for your customer in whichever shape or from wherever they want to access you. Alexander, would you agree?
I definitely agree. For me, the secret sauce is going to be those who manage to merge the intelligence and the tradition of the private banking world. And if you manage to mix this with the transparency and the simplicity of a social app, then you have a winner.
You do. So keep investing in that user experience as well.
Definitely.
Excellent. I have a red thing flashing at me. So, gentlemen, thank you so much for joining me. I think the future for crypto is bright. Keep building what you are building, and hopefully we will get to more adoption. Responsibly, we will get to more adoption. Thank you. Please join me thanking my panelists for this session. Thank you.